Hi friends, in this video we are going to look into this topic where you enter into a trade, and as soon as you enter, the market reverses, and this occurs very often to beginners or who are new to trading, wherein they will wait for confirmation of the trend or of the trade that they are expecting. So they will, if they are looking for a bullish trade, they will wait for the confirmation, and as soon as they take a position, the price will start reversing and they will be in loss right away, and then it becomes difficult to manage your trade. So we are going to look at few charts and see what mistake you are doing while punching your orders. So actually, if you see behind this, the reason for this to occur is not technical analysis, or it's not the analysis you have done. It is actually a psychological problem. It is the way you are approaching your trades. So let's take a example which is outside of the trading subject. So let's say you want to buy something. Let's say you want to buy a TV or a fridge or any electronic device. What you will do is you will go to 2-3 different shops. You will check what are the deals available. Is there any discount available? Who is giving you the best price? And once you get this information from everyone, you will take an informed decision which is best suited to you, that is at the lowest cost. So that is the best decision for you. So you will spend some time, you will wait for, before taking a decision, you will take certain data inputs, and then you will take an informed decision. But in markets, that is not how you work, or how anyone who is new to market, that is not how he approaches the market. And why this happens is, actually, you see, market from a psychological perspective, it is a very difficult situation to be in for your mind. And why it is so? Because in market you don't know what is going to happen next, and based on the decision that you take of taking a trade, you may either get a reward, that is you get some money out of it, or you may face a loss, that is a losing trade plus you lose some money. And because it is difficult to predict market, it's just like flowing water, so you can never ever try to understand or try to kind of predict which side the market or the prices are going to move. Your mind is in a very stressful kind of state, and in such a situation, your brain automatically stops certain features or certain aspects of your brain which help you in rational thinking. So what the brain perceives is this situation as a threatful situation, and it thinks that I may have to fight or flight, that is I may have to fight with someone or run away from this situation. It perceives the trading, the actual real-time trading as like that. So because of that, your whole body becomes tense, and you try to, your brain suspends certain features or certain certain things about your brain which help you in taking rational decisions. So already your brain is like, if you have to give a example, it's operating in a safe mode, just like your Windows. So all the features are not available. So you have to make do in certain specific amount of features and whatever the performance behind it. So already you are in such a situation, and what happens is you think that I have to take a trade and I have to earn money. So as soon as you, what happens is, as soon as you see big movement, so let's say you see the prices coming over here and you have a kind of a bearish viewpoint that you expect that it will test over here and it will fall down. Now you are seeing these candles in real time that okay, some big movement has happened, and you're not sure because this is just a pullback. Again, it is going up, so maybe this is a lower higher high and it may break the CPR. So you're waiting, and then suddenly you see this big huge red bar, and FOMO, that is fear of missing out, kicks in. So your brain sends out a signal that if you don't take any action now, you are going to regret later. And that emotion, that sentiment is so strong that you take an irrational decision of entering a trade at such bars. So you may see such lots of such examples across. So many times what happens, a breakout will happen, a huge breakout, and you will enter some. And now if you see, this bar is even there is a pin bar, so price is moved, but in real time this may be a red bar at some time during the 3 minutes, and you think that, oh, this has broken down the support, it is going to now test the CPR. So you enter somewhere here right at the bottom of this candle, and then the price reverses and you are directly in loss, and then it hits your stop loss, and you think, what is happening, why the market, it is like someone is sitting on the other side, and as soon as you take a trade, he punches in order in the opposite direction to take out your stop loss. But actually this is happening because of FOMO and the psychology of you as a trader during the real time trading market time. So how do we resolve this? So how do we come out of this? So it is very simple actually, but it is difficult to do. So you basically in markets, you should always try to simplify things, because as I said, you are operating in safe mode. So you should not have lots of complex process or complex thought process going into your decisions. You have to keep it simple. So how do you take an entry then? So the entry to your trade should always be taken on a pullback. So for example, this trade over here, this candle, you are not going to enter on this candle even if it is falling. So obviously there will be some time, some certain conditions when this will just fall like this, it will go down, something like here. But that is a missed trade, that is, you can't do much about it. That train has already left the station, and it's taken such a critical velocity that you can't run and sit in that train now that it has left the station. So you should not regret it. These things are going to happen in your in markets. You are not going to capture every move that happens. So what you have to worry about is that whenever you are entering a trade, it is at the correct location and the low risk location. So for example, here if you see, it worked out perfectly. So a huge red candle, and after that a pin bar occurred, and some people entered here thinking maybe it will go up from here. But if you see this pullback, it went to up to about half of this move down, and then you see this red candle. So if you were ready to buy it at this location or at this location, you should be happy to, buy. When I mean buy, I mean buy a PE or basically short, taking a short over here. You should be, in fact, more happy to take a short over here because it is giving you a even better price. In real life, while buying an electronic device, the better price you got, the more happy you were. But here, your mind again plays a trick with you that what will happen if this goes up? I will end up in a losing trade. So that is the thing that you have to overcome. So you have to always keep in mind that you will never buy on breakouts if the price has extended a lot. So for example, if you see this candle over here, this is a candle that you can buy a breakout on. So why this is a candle why you can buy a breakout on? If you have seen this, there is a nice down movement at the support. It took some support. This is like breakout failure of this support, and it kind of stabilized over here, took support, and was again shooting up, but then again huge selling came up. And now if you see this pullback over here, this pullback is very shallow. It is not, there is no strength in the bullish move over here. And then there is a big red candle, small green, and it is breaking down the support. So after taking support multiple times over here, many people who have bought in this area must have kept their stop losses somewhere over here. So this, once it starts triggering, it will give you a fast move. So this was a good entry point on breakout. So what is the characteristic of this? That it is very close to the breakout, and the previous price action that it had was very, it supported the short trade. But here it has already extended a lot, and that's why you want to wait for a pullback to come in. So going forward, I think what you should do is try to see, or try to, in your daily trades, if the price has extended in your direction, you should wait and kind of take a trade on the pullback. So let's say this has broken out, right? So you don't take a trade over here. You have to wait, let the price come over here, and if you are happy to take it over here, why not take it over here, right? It is a better price. So try to understand how your mind behaves and keep these things in mind, and definitely you will start taking good entries, and you should not face these problems going forward. If you like the content being presented here, do subscribe to my channel. Thanks. That is all.